Hi, this is Anne. In this video, I'm going to share with you about market structure. Yesterday, I held a Zoom call about market structure until the electricity went off. So I supposed to record the whole Zoom call. So when I continued, I think I messed up with the recording. So I remake this video for those who cannot attend the Zoom call. So you guys also get the same information. So anyway, yesterday we discussed about market structure, 1, 2, 3 pattern, and also scalping. But I will make those about scalping in a separate video. So for now, let's just focus on the basic of the market structure and how you trade it. Okay. So quite a few people ask questions and sometimes they are confused how to read the market structure. So basically, when it comes to market structure, there are two types. Okay. There is main structure and minor structure. So before I continue discussing what is main structure or minor structure and what's the difference and how to trade them, let's focus on the market structure in general, okay? Because basically the look of the main and minor are actually the same. It's just how you managed or how you read them and how you trade them that you should understand, like where the money could go when you trade the minor and when you trade based on the main structure. Okay, so for now let's just focus on the market structure in general. So when it comes to market structure, we know that there is a downtrend, right? And then there is an uptrend, or there is a sideway. Yeah, more or less something like that. And obviously this is just a picture. When it comes to real chart, it will not be as neat like this, right? But we will go to the real chart soon. But I just want to show it to you, the market structure in general, and give you a quick overview, and so you will understand later on how to trade it. So right now, these both are working the same or exactly the same between main and minor structure. They are both the same, like this. This is a downtrend or a bearish. This is an uptrend or bullish, and this is a sideway or consolidation. Both main and minor are the same pattern. They have something like this between bearish, sideway, and bullish. So this is market structure in general. Okay, so let's focus on this. So we all know here, and this is very basic, I'm sorry, but I will just show it to you so it will make sense for you when I start to explain it later in this video. So this is high, this is low, this is high, low, high, low. So these are all equal highs and these are all equal lows. And here this is high, low, high, low, high, low, something like that, right? Okay, so now when we know the lows is broken, and here the price breaks the low, this is BOS, break of structure, the price breaks below, there usually the probability the price to go lower. Okay, so usually here from the low going up, this is what we call it a retracement or retest, and before, like taking a break before it's continue lower, and then it breaks the low again. So every time the market breaks the low, there is a probability the market could go lower, etc., etc., until the market breaks the high. When every time the market breaks the high, there is the probability the price to go higher. And when the price breaks the high and then it going down here, it is called a retracement, okay, or retest. And when the price continue to go higher and breaks another high, it is called a continuation from the trend itself. So this is continue higher and breaks another high, and here is a retracement and then continue higher. Okay, so that is basically the basic of the market structure. Okay, so now let me talk about the main structure. What is the main structure? Well, basically, let me just clear this all. Okay, so basically the main structure, now let's write it down again. There is main structure and minor structure. Okay, now let's draw main structure. It's the same, like I said. You just want to see a clear swing high, swing low, a clear lag, a clear move between the lows and the highs. Okay, so let's say consider this as the main structure, the clearest movement by your eyes, you see, by our eyes, between the highs and the lows. And bear in mind, when it comes to highs and lows, sometimes it can be very subjective, and I'm going to show it to you later. Okay, so right now let's just focus. Let's consider this my main structure. This is the move of every highs and lows that I can see in the market. This is high, this is low, high, low. So this is the main. So right now, what is minor? Minors is basically the movement within the main structure. Okay, I changed it with a different color here. So we know that in this instance, in the main structure, the market is going lower, right? I mean, in this case, it is in a downtrend. So here, usually the minor is the movement within the main structure, and it is smaller movement. It's still the same, right? High, low, high, low, high, low, and etc. So there are moving something like this. So the moving is usually just between bullish and bearish candle. I'm going to show it to you in a real chart very soon. So this is minor structure. So I guess right now you get the idea, right? Between the main structure and minor structure. So now what confused people, or confused many when it comes to trading, is that sometimes they messed up that, like something like this. Okay, here you know that the main structure is, for example, bearish, but then the moment there is the break of structure here start to go up, people think, is it a market reversal that now the big trend is gonna go up? That is what mostly people confuse. And believe me, I myself sometimes still like at some point everyone will get confused by the price, if it is a start, or well, if it is the time for us if it is the time for the market to reverse from the downtrend to become an uptrend, well, or is it just a retracement and then there will be another continuation to the downside? That is mostly the problem, right? Because basically, if you trade based on the trend itself, let's say, let me make it the same color again. Okay, I always say it in every video, if you want to trade based on the trend, let's say based on the main trend, okay, now here, and then there is the break of structure over here, right? And this is, let's say this is also already a downtrend that is already established, and there is another break of structure here because it has broken like several times, you see. So this market has a high probability to go lower. Does that make sense? Because this is breaks the low. So when the market is in a downtrend and then there is the break of structure here, I always say once it has a retracement and probably picking up the zone, either supply or demand or the order block probably over here, and by the time you enter a trade, say from here, where is your take profit target? So I always say look left. Where is the last low? This is the last low, right? So your take profit target can be the last low or a little bit more, like probably 27 Fibonacci. That is another subject that I'm going to make another video when we talk about the Fibonacci, okay? But right now, if you trend, for example, based on the main structure, if the price, if the market is in a downtrend and you are following the trend, and the moment there is the break of structure here, the BOS, and then you sell, for example, from here, you can target the last low. That is the minimum. Okay, if you understand about the A, B, C, D, basically you can target this leg, the same leg like this. If this is, for example, let's consider this 100 pips, so you also can draw from here 100 pips. So this leg, the same like this leg, this is just another strategy. So basically you can aim this low. It's become A, B, C, D, something like that. But I do not want to confuse you with that, because this is not about trading strategy. I just want you to understand. So if you are trading following the main structure, okay, and where is the pen? So what you want to do is that you want to target the last low, at least, okay, at least the last low for to be safe. So you want to trade here because you are following the trend. Okay, that is if you are following the main structure. Now let me remove this. Now we are focused on the minor structure. Now let's focus. Sorry, where is the pen? Okay, here you go. Okay, now we are going to focus on the minor structure. How to trade the minor structure? If you for example, you already draw your main structure, okay, so now if you understand the big movement, let's consider main structure is big movement, minor structure is the small movement. Okay, so now if you want to trade the small movement, sometimes you will see in here like this one, within the retest or retracement of the main structure, you will see like the break of structure, break of structure, break of structure. Okay, so you do not want to think to like how do I say it? Hold on a second. Let me draw again the big structure here. Okay, and let me go back with the same color here. Remember that I said this is a downtrend, for example, okay, but here you see the break of structure, right? Here is the break of structure. Then you do not want to aim by looking left, because I always said, okay, this is your take profit target. No, it is not. You do not want to do that. That is the difference. Remember, the main structure is in a downtrend. If you want to trade based on the minor structure, okay, what you want to do is aiming like you can actually trade from here, but you cannot expect like maybe like 1 to 10 or 1 to 15 or more, maybe like 1 to 2, 1 to 3, you see, because it's a small movement. Well, if you dig deeper, like let's say your minor is on H4, you can go to M5 and 15, you still have possibility to actually make 1 to 5 above, okay? But what I'm saying here, when you trade the minor structure, you do not want to use look left. Like I said, I always said it in many videos. I'm sure if you have been within the community, you know that I said like, if there is the break of structure, where is your target? Your target is the last low. Look left. So this is the left side, the last left, right? And then so here is your take profit target if you enter from here. Now, if it is a break above, for example, where is your take profit target? When the price come back here, taking your order block, look left and you aim the last high. So you can take profit target over there. Okay, so this is if you follow the main structure. But if you follow the minor structure, you do not want to look left and aiming the last high or the last low. That's the difference. Okay, so I think I better to just show it to you in a real chart. Okay, so let me show it to you. You really want to be careful if you aim the minor, the minor structure. When you aim the minor structure, what you want to do is to aim the next order block. Let me show it to you. Now, see this on D1, this is euro dollar. overall, by a glimpse, you know that it is in the downtrend, right? So now if I draw for example, the main structure, more or less, like I said, it can be very subjective, right? Look, right? This is a downtrend. Look here, break below, this is the low, this is the high, and when the market breaks lower, there is a higher probability the market to go lower. This is the low, this is the high, and here's breaks again, breaks another low, lower, lower, and this is high, lower high, lower high. But yeah, I do not want to go to that detail, but I just want to show it to you. Overall, the market is in a downtrend. Every time it breaks the low, let's say your entry is from here, you want to at least target the last low. Now here it breaks, oh sorry, why I said that, hold on. Now here is breaks the low, right? And then it breaks the low, and then when the market make a retracement, sometimes here, let's say you get an entry around this area, for the sake of example, where is your take profit target? Look left, here is your take profit target, the last low, okay? And then here is broken again, but the market coming down, and then so here, when the market goes up for retracement, where is your take profit target? The last low. And if you had an entry over here, for example, you go here, this is your take profit target, etc. Right? Now, this is, I'm talking about the overall of the main structure. Now take a look between this main structure. I'm sorry, I will keep drawing the same thing over and over, something like this, so for you to be able to see it clearly, okay? So here, if you take a look, the small movement, like between bearish and bullish candle, here is the small structure. Can you see that? So this is the small structure. Okay, here, just between the bearish and bullish, something like that. You know the whole idea, right? So when it comes to trading, the most important thing is that you have to understand how to read the market structure. Market structure is the king of trading in reading the market. Whatever strategy, be it supply demand, be it order block, be it another price action, you got to be able to master the market structure. So this need practice, this need chart time to be able to understand how to plot the between the main structure and the minor structure. And again, when it comes to market structure, it can be very subjective. Why I say that? Well, I said previously that this is the main structure to me, for example, right? And to some people, hey, no, and that is not the main structure. To me, here is the main structure. Is that wrong? No, it's correct. So that's why I said, to me, the previous one, you saw it in my drawing, that was the main structure. And maybe to you, this is the main structure. And here is the minor structure to you. So that's why it could be very subjective, but even though it is very subjective, we all still come back to the same point, to how to actually how to actually manage our trade, or which direction we want to trade. Either we want to buy, either we want to sell. Now, even though when we read the market structure, it could be very subjective, but again, when it comes to the break of structure, everything the same. It will be just horizontal line. Okay, take a look. This what makes the break of structure. It's just a horizontal line. It cannot be like that. It cannot be like this. It's just use a horizontal line, so you will know regardless a big structure or the minor structure, you know, a big structure or small structure. Take a look. Just look at the last low or the last high, the last obvious high or the last obvious low. Okay, so here's the break structure, and then here is another, oh gosh, why? Okay, here is another break of structure. This is another break of structure. Maybe to you this is break of structure, and here is another break of structure. So we can see, we all can tell that the majority of the trend, even without using the tool or the line like this, we all know that the market, even by just our own eyes, that the market is in a downtrend. And to prove that, we see that how many it breaks the low, right here, and then here also break the low. Regardless, you want to choose this, you want to choose this, you want to choose this, by the end it breaks the low. So we know the market is gonna go lower until it start breaking the highs, and then the market will go higher, right? It's simple as that. So you do not want to confuse yourself, like you know, because people can have a different opinion between the highs and the lows, and the main structure and also the minor structure. If you are still confused, especially if you are very new to trading and how to really understand, you can use an indicator. It's called a zigzag indicator. Okay, so you just click a file and then choose indicator, and then so click OK. You just you see that here is an indicator. You can make it as if it is the main structure. Okay, can you see it? Let me make this color. Okay, let's make this black. Okay, so you can tell that this is the main structure, for example, for you to train your eyes, because later on you can just tell, okay, this is the main structure, and then you can you know, make you can train your eyes, and this is the main structure. Okay, this is the minor structure. That at least the way I see the market. Maybe you are different. Like I said, maybe you want to say, no, this is this one is the main structure. Yeah, anyone can say that, right? But here is the way I see the market. Let's say if you want to use zigzag, so here the zigzag is the main structure, and this is the minor structure. Okay, so now let's see again into how you want to trade it. Okay, it depends on what time frame you want to focus on in trading. Okay, so in each time frame there is always the main structure and the minor structure in every single time frame. Now let me show it to you. Hold on, let me just remove the zigzag, okay, because I don't use indicator. So here on D1 it is a downtrend. Okay, the structure, the market structure is in a downtrend. But now take a look on H1. It's the same pair, euro dollar. On H1 it is an uptrend. On D1 it is a downtrend. That what makes people confused, right? Whether they have to buy or whether they have to sell, it's really up to you. People can buy and people can sell, but you do not just buy and sell blindly, right? That's why you need to understand the market structure and in which time frame you want to trade. Here's the key. If you want to enter a trade, again, if you want to enter a trade, like me, for example, I'm a day trader and also a swing trader. So I usually looking at the main structure from D1 or at least from H4. Okay, now let's say I take it from D1 and then I enter a trade, for example, on H1 over here. Okay, now if you are a scalper, for example, you may want to see a market structure from H1 and also from M15, and then you can enter it on M1. Okay, that's it. So if you want to enter a trade from H1 or M15, you see it from D1, the main structure, and then you go to H1, and then you will know. I will show it. That's rather confusing for now. Okay, but you will understand later after I show it to you it all. Okay, So now let's just focus like the way I trade, for example. I just want to show it to you. Now here, the market is in a downtrend, okay? But does that mean I only have to keep selling? No, I do not have to keep selling. I actually can buy also in a downtrend. Let me show it to you. Okay, so I haven't been trading like for almost a month because I was traveling a lot for the past couple of weeks. So let's see, this is a downtrend, okay? Now I will show it to you that this is the break of structure, and I would consider this another break of structure here, and here is our order block over here. Okay, if you are still new to the order block, you can go to our main channel, and there is a free course for everyone to learn what order block is. So this is a sell order block if I'm following that the market is in a downtrend. So basically, if I want to aim really big, for example, I want to wait the price to come back here, and I'm aiming this low, right? Does that make sense? Because it is in a downtrend, I will look left. So here is my take profit target from here, right? But now take a look. I already have an order block over here, for example, and then this is in a downtrend. But let's say the market was still over here by the time. Where is that? Okay, let's say the market still over here. Okay, now let's go to H1. So the market was still over here. So based on daily, there is a probability the market could go to this zone, right? To this order block. So when I go to H1, now this is considered minor, right? On daily, this one, take a look. Here, this is up, down, up, down, up, down, up. So here, if I want to take advantage, for example, for the retracement before it is going up here, when I take a look at the main trend is in a downtrend, but I buy from H1, for example, that consider a counter trend based on daily, right? Because it is a downtrend, but I'm willing to buy. So in other words, if the market, for example, if the main structure is going down and you want to go and if you want to trade the minor structure here, let me draw this. This is the minor structure, right? That's the minor structure on D1. Now I see on D1, let's say, that is already a breakout. Is it gonna go up? No, it is not the reversal time. Why I said it is not the time for reversal? Because I want to see if I want to start buying for a long term. I mean, for my main for a higher reward based on daily, I will wait this high, or at least this high, to be broken by the price. Remember that before when I drew it earlier, right? Like that, on the main structure, every time the lows is broken, there is a higher probability the market to go lower. Only by then, when the highs is broken, then there is a probability the market to go higher. But here, in this case, the market still go lower. This is broken, right? So here, to me, this is a retracement. Could be a retracement. The market to come back here and going lower. I will start looking for a buy if the market, if the market breaks this level. That's why, now here, that's why if I want to buy in a downtrend market based on the minor structure, I am not going to aim the last high, but I am going to aim the next order block. So my target could be this. Does that make sense now? Okay, so if I am trading the minor, in a downtrend, something like this, and I am buying, this is considered a counter trend based on D1. Okay, so my take profit target, I am not going to aim the last high of the main structure, but I am going to aim the order block, the next order block from the main structure over here. I hope that makes sense. You maybe need to keep replying some part of this video. Okay, so here, based on D1, this is the minor structure. When I see, let me draw this again. Okay, so when I see there is a break of structure here, for example, this is best daily high. Okay, this is a break of structure, and here is another break of structure. This is a break of structure. These all minors, because the main one probably here or here, depend on which one you consider as a major structure, correct? So now I am, for example, seeing, oops, I have the time, sorry, for example, I consider here, right? I consider here, wow, this is the price, it's gonna go higher. There is a highly probability that the price to go higher. Yes, but remember, this is a downtrend. So where should I aim for my take profit target? I'm not gonna put my take profit target at the last high. Again, this is a downtrend. So my take profit target as, look where is the last order block. Here, here, so here is the last order block. So this would be my take profit target. When it comes to a counter trend, you only want to aim the next order block. That's the key. Okay, when it comes to a counter trend, you want to, if you sell as a counter trend from an uptrend, you want to aim the next buy order block. In this case, if I buy from the minor structure in a downtrend market, I only want to aim the next buy, the next sales order block over here, because there is no guarantee. The higher probability still, even though there is the breakout, the higher probability still the market go here and here, unless the market breaks that structure. Maybe here it can go like that, because in this area there are two possibilities: the market either touch here and continue down, or the market breaks the structure and also break the structure, then the market could go higher. But that is how you manage the trade, or you aim for your take profit target, is that because you understand whether you are trading the main structure or the minor structure. But also bear in mind, sometimes, okay, sometimes when you are trading, sometimes you are late, right? So this is hold on, let me make this smaller. Okay, when it comes to minor structure, it doesn't mean it is always a counter trend. It can be also in a continuation, right? Let's say this one is, this is a clear one here. So here is the break of structure, right? You may lose your chance around here, but then, you know, when you see around here the small one, there is the small structure here, so it can be a continuation for you. This is, okay, let me just draw this again. So hold on, so not to confuse you, so this is the main structure, right? Now there is this break of structure over here, it's break below. Now if you take a look over here, right, there are smaller structure. So maybe you missed the chance to sell from here, but you still got a chance to sell from the smaller structure. And as a continuation, it is only a counter trend if the main structure is down and then you buy, for example. So if you buy from here, you want to look left, not aiming the last high, but you want to look left, where is the probability the market will reverse, continue down. In this case, this order block, right? So this one is your take profit target. The order block is the take profit target when it comes to minor structure trading, unless you are trading the minor into the continuation, the same strategy, not the same strategy, the same direction as the main structure. Okay, I hope that makes sense. Now again, I will show it to you now on H1. Hold on, give me a second, let me just remove all this. Now first I draw this, okay, so because this is a downtrend, and this is, if I want to sell for a continuation, I want the market to come back here, and I may put, like, for example, let's say I usually put 50%, for example, around here, and my take profit target would be the last low. So let's say I just aim 1 to 10, something like that. Okay, so this is a good deal. So this is on D1. It can take maybe a few weeks to finish if you trade it directly on D1. But right now, again, I trade the minor one over here, and I see, that is a break of structure. Let's just say this weekly high. Okay, remember that the blue one, this is weekly. This is weekly high. Let's go to H1. Okay, let's go to H1. Now, see this? You think the market is going higher, right? This is on H1. Here, remember that the market, this is the weekly high, is broken. So you thought the market is gonna go higher, but when you see on D1, this is a downtrend. Can you buy, or you should keep selling? No, why not? Why not? You can buy. Take a look here. Here there is a buy order. Sorry, where is the break of structure? Here. Okay, this first, it breaks the weekly high. Look, whenever it breaks the weekly high, there is a higher probability to go to 127. But this is another topic, but I just want to continue saying this. So when you see there is the break of structure, in this case, this is the order block, right? But yeah, based on this one, based on this break of structure, this is the order block. It didn't hit. But as long as there is the break of structure, you just keep following. So here is the order block. Take a look. Let's see that. If you continue, I don't mind it hit a stop loss, right? It may hit a stop loss 1. So this is my order block. But take a look. Where is my take profit target again? My take profit target is the daily order block from D1. From here, right? So this is my take profit target, this line. Okay, so now here, if I were to take this one, for example, it hit. If it hit, then I will just re-enter. Why? Because I still have a chance. I believe that the market still, especially look at that, this is still breaks higher again. Look, remember, when the price breaks higher, there is still probability the market to go higher, even though this is on H1, right? This is breaks higher, so there is higher probability the price could go higher. I just want to show it to you. That is the difference when you want to trade the minor as in D1, okay? But on H1, it is like a main structure. So here there is still break above. So you go here, and again, so your take profit target is clear. So this is your take profit target. Maybe you just want to aim daily Fibonacci 161 over here to be conservative, you know, but you know, it's really up to you. But that's how you trade the minor and the minor structure and also the main structure. In this case, you can make like, well, it's good. You see, oh, sorry, I usually put at the 50%. So it could make 1 to 20. Probably I will close it at 1 to 15. So if I were in this trade, and if I see this, I see there is a high probability the market to reach this order block on D1. That means, so I can get 1 to 15 or 1 to 10 already. You know, so this is not like cherry picking, because basically when you can read the market structure just like that, so you understand what is minor on a D1, it could be a major or main structure on a smaller time frame. Okay, so you will know where to stop to aiming, that maybe it is the time the market is going to reverse. So if you can see, for example, if you know that the market is going downtrend, and then when you monitor the price on H1, okay, now let's say starting from here, I would probably just start from here. Look at that. Okay, this is already break above. Can I buy? No, but I'm not feeling good about it. How about if it is break the structure? Okay, I think I'm good, so maybe I will take this as my order block, and then I believe this, especially if this one is another break of structure, let's say I make this as my order block. Okay, and everyone knows in the group that, you know, sometimes the order block hit the stop loss, and I don't mind. I can give it like up to 1 to 3 times. I usually give it 3 to 4 maximum. Usually 3 times is my maximum to re-entry. Okay, so in this case I take it like 50%. Let's say I lose 3 times. Okay, and take a look. If you can let it go, you can aim like 1 to 20 or 1 to 25. If you really understand about the market structure, you see it, the minor, on a higher time frame, and go to a lower time frame and see it as the this minor usually become the main structure, like on H1. You just keep looking. Remember, when the price breaks higher and it looks like the main, there is a possibility the price to go higher. And then it keeps breaking the high, there is a higher probability to go higher. So to know when to stop or what to aim for, you can look at the higher trend from the higher time frame. Your take profit target is the next order block over here, because it is like a counter trend based on D1. Okay, so that works also the same with other time frame. Like for example, maybe when you take a look on H1 and then you trade it on M15, because, well, basically, you know, like here I said that on H1, on D1, it is a minor, right? Over here, minor structure. When I go to H1, it's become the main structure. It looks like an uptrend, correct? So now when I go to H1, give me a second. So when I go to H1, here you go, you will see again between major and where? Okay, here it looks like major structure, right? Major structure. Now take a look again. This is H1 main structure. Sorry, main or major structure, I think it's just the same. So now if you look at here as main structure, and then you want to scalp, for example, and take a look. Here is minor structure, right? Yeah, more or less something like that. Look, that is just in between bullish and bearish candle. That is the minor structure. So what is a minor structure from D1? It could be a main structure on H1, and what major structure on H1, it could be and what minor on H1, it could be major on M15, etc., etc. You see, if you are good in reading the market between major and minor, and then go back and forth between just even two time frame, you can make a high return in terms of aiming just 1 to 3. You can aim like 1 to 10, even though you see this is on a minor. On the D1, just go to lower time frame. Yeah, you still can get like 1 to 20, even it is a counter trend based on D1, right? And then so on and so on. So you just have to focus when it comes to the market structure in general. Okay, when it comes to market structure in general, you just have to you just need to understand between the highs and the low, and then which one, because the most important thing is the break of structure. Regardless, the few each person on the high and the low could be subjective in terms of the length of the swing high, swing low, but basically when it comes to the break of structure, you just need one line like that. You just see where the price breaks. Is it breaks below or breaks above, right? Like maybe from here, for example, the market breaks below. Okay, so here this is also another breaks below, and then now you see this is breaks above. Maybe you are not satisfied, but no, I'm not gonna buy yet unless it breaks this high at least, or the last obvious high. You see, if this is if you think you are doubt, for example, do you think that the market is gonna reverse or it is just a retracement? It happens, guys, including to me. For example, if I do not feel sure, the market is not really clear in the market structure, whether it is the time like for reversal, not just based on the chalk, even a chalk, or like a reversal pattern like this is a reversal pattern, right? Take a look. This is a chalk, this is a reversal, this is break below, break above. The people call it chalk, change of character. It is reversal, but sometimes it can be also wrong. Maybe it is still a retracement, not a complete reversal. Take a look at this. Let me show it to you. What is that so difficult? So here, take a look. This is break below, and here is break above. Isn't that a chalk? But the market still continue down. So the most important thing is that just focus on the highs and the lows, okay? And which one is broken. Sometimes if you doubt, for example, let's say here, okay? I'm gonna show it to you. The market is going down over here, right? And then this is breaks above over here. And then you start thinking, can I buy? Is this my order block? And if you doubt something like this, right? Consider this one is not there, okay? From this period over here is not there. So now the price is going up, it's broken. Can you say that the market is gonna go higher? If you doubt, guys, and just see, is it clear? Because this is now basically a downtrend. So you may wanna wait. No, I'm gonna wait to buy. If the price breaks this high, for example, and turns out it didn't, right? And instead of going only reach the equal high and then going breaks lower. Now when you see the price has breaks the low so many times, so whenever it reaches the order block like around here, you do not have to be afraid, even though there is this high is broken, right? Here you will mention, is this breaks the high? Is it now reversal? Oh no, let's take a look. Look at that. You just have to see how many lows has been broken. That means that the prices continue lower. How many highs need to be broken that the price continue higher? Sometimes it's just very clear to the eyes, you see. Like if it is still doubt, so a good thumbs up, like if the market reverse, okay, if the market gonna reverse from a downtrend to an uptrend, I usually wait at least until I see 2 break of structure to the upside. Like for example, if I consider this, this is already break of structure. Okay, sorry, this one is more clear to me here and here, but this is not so strong to me. The one that I want to see the market to be, to reverse, it could be this one, instead of this or this. So maybe I want to see like the 2 or 3 structure. It will not be late, when people will say, oh, maybe we're gonna be late. So many people, they are making a lot of losses because they always try to enter from a chalk or a market reversal. They just keep focusing, looking for market reversal, where actually a lot of winning trades are in the continuation. I'm just saying. So I personally love to enter on the market continuation. So people always once there is a chalk, they really want to grab and to jump into it until you get 5 times losses in a row, until like, because it is not the time. It's not like the real chalk, because a change of character can also misleading. That's why you have to train your eyes whether it is a change of character based on the minor structure or on the main structure. If you take a look of a chart, for example, on the main structure, you will want the for rule of thumbs up, if you want to see that a real chalk, to me it should be based on the main structure rather than on the minor structure. You do not want to take a chalk based on the minor structure as a reversal. To me, this is not a reversal yet, but this is a change of character, yes, but it doesn't show a change of character, a real change of character. To me, the real change of character, it could be this, the big one. You see, because this is the main one, right? So this is the main one. So if this one is broken, there could be already several highs. The minor structures, the highs has been broken until the main one over here has been broken, then you are comfortable to continue keep buying. So I didn't really realize, I did not expect that this could be this long, this explanation, so sorry guys, but I just want to explain how to actually everyone to be able to read the market structure and make it different between the minor and the main structure. So we will keep doing this, and I do my best so to review the market on several pair, like how to compare between minor, like for example like this. Okay, let's just start from here. So I still have like quite a few minutes before we end this video. So here the market is in a downtrend. Okay, so here is the last clear order block. This one is already hit by this one, but let's say the last clear order block now is this one. Why it's so difficult. So here is a sell order block. Okay, if the price touch here, I will sell from here. If I were to enter directly based on daily, okay, I will take it based on 50%, for example. But remember, there is a probability the price to go to this one. Take this one, take a look here. Okay, now remember, this is a strong high over here. I consider, yeah, slightly strong high, but this is a very strong high, this one. If the price breaks this high, so there is a high probability the market will reverse and continue higher. But if the price touch here and then break this low, there is a higher probability the market could go lower to either to this green line or even to this monthly Fibonacci. Okay, so that's how we read, and we can always read the same how I read here on D1, starting for example from H1 and then go to M15, okay, or from H4 and then go to M30. So you choose what is your main time frame to read the main structure, and then choose 2 or 3 to backward, like 1, 2, 3, for example here on H1, okay, 2, and then as your minor structure, so you can see where you can aim based on main and minor, because what is minor on the main structure here on D1, it could be main structure on a lower time frame to make you easier for you to enter the market and your take profit target. Okay guys, I'm so sorry if my explanation is like really going there and here. I feel like my English is so gibberish again today. Well, anyway, that is all for now. So we will continue discussing about the market structure until everyone understands in the community. Thank you. Bye-bye.